Good morning, afternoon, or evening, ladies and gentlemen, Allincrypto here, and welcome back, guys, for what is a slightly later than normal, jam-packed daily cryptocurrency market update. If you are new to my channel and finding yourself on my videos for the first time today, don't forget to check out that subscribe button because we try and keep you guys up to date every single day around 1 p.m. UK time with the latest and greatest things happening within the crypto space, but also the broader markets. That's exactly what we're going to be doing in this video. This week coming is going to be huge for the markets, and that's what we're going to be talking about broadly throughout this market update. Yesterday, we looked at really what's plaguing the markets, and it's this uncertainty around inflation and thus what the Fed's going to do as a result of it. And we are going to be getting clarity in regards to that, or some more clarity. I wouldn't say total clarity in regards to the Fed meeting on Wednesday. We've got non-farm payroll on Friday. And actually on Monday, which a lot of people aren't paying attention to because they don't understand what it even is, we've got US Treasury refunding announcement, which is where Yellen is going to essentially set out the refunding program that she's going to put in place in regards to the debt markets. Now, this happened last November, I think. And that saw a lot of liquidity enter the markets. I think you're going to see a similar thing happen with this one. So we're going to start the video up there and really explain what this is. Arthur Hayes actually, a really unrated take on it, gave his take on all of this. And then we're going to be talking, Brian Armstrong released the owner, founder of Coinbase, not owner anymore because it's a public company, but founder of Coinbase, released a really interesting take in regards to the fact that the US is moving towards a Japanese style kind of economy, which it is. Remember, Japan's third largest economy in the world. And we have been long last year the Nikkei, or I personally have been long the Nikkei, which is essentially a bet on the devaluation of the Japanese yen. The US economy is essentially going down a similar path, which means that stock market, you've got your bullish narrative behind equities and broader markets. And I think gold has been setting up a pattern that is basically telling you that the US dollar is screwed. And so are a lot of risk that's valued in dollar terms, all set to go up in regards to the dollar. And I think it has a lot to do with what's going on sort of monetarily. But we'll look at all that sort of video. I'm confusing people, I think, with extending on Brian Armstrong's comments. But big day on Monday. Tuesday, I believe, which is the 30th. It's either Tuesday or Wednesday. You actually have the first Bitcoin and Ethereum spot ETFs going live on the Hong Kong Stock Exchange, or a few of them going on live on the Hong Kong Stock Exchange. Going to be very interesting to see what kind of inflows we see there. Certainly, we've seen a real appetite out of Hong Kong and sort of more mainland China in regards to gold. Again, escaping of the sort of government systems. And then we'll sort of round everything up. So a huge week. Monday, debt refinancing from Yellen, which is liquidity. I think whichever route she chooses. Tuesday, I think you've got the Bitcoin spot and Ethereum spot ETFs going live in Hong Kong. Wednesday, you've got the Fed meeting. Friday, you've got non-farm payrolls. Huge week. We'll talk you all through it. Let's start things off in regards to liquidity that could be coming for the markets and actually providing a bit of relief in regards to what we're seeing take place. And I'll just go ahead and move the camera. We've been sort of playing around a little bit with the camera. Obviously, I didn't bring my camera with me yesterday for the daily market update, but US Treasury funding set to offer relief from supply rises. So really liquidity is what's meant by supply rises. The US Treasury Department is expected to offer markets some relief next week when it details refunding plans for the coming quarter by keeping the size of most of its auctions steady after 3 quarters of increases. Investors will focus on the expected debt repurchase program and whether it offers any insight into long-term financing plans as concerns mount over rapidly rising US debt. While the Treasury may increase size of some issues, including the 10-year Treasury inflation-protected securities, most auctions are expected to stay unchanged. So they're still buying. These have been upped. It's just not an upping, but the upping that they previously done is still in place. Remember, the Treasury's injection, spending of money that they finance through basically issuing bonds, and that's how money comes into existence. You take a mortgage out, you get the money, it goes into the economy, and there's a debt on the back end of that backs it. So there's almost like a double accounting system that's essentially in place here. But they've been continuing to up the amount of debt refinancing they're doing because they're upping the debt. they're set to basically keep the level that's already been upped in play, but there may be some slight changes on this. And this is ultimately liquidity for the markets as they're sort of refinancing or putting plans in place to refinance the debt that's already out there, which basically means to increase the money supply even more so. Thereabouts, not quite as blunt as that. There is a little bit of mitigation in regards to, some of the debt actually rolling off, but they're kind of, it's not really rolling off in the sense that it's being paid. They're just refinancing it. So as expected, tax receipts added roughly 200 billion to the TGA. So that's the Treasury's balance. Forget about the May Fed meeting. The 2024 refunding announcement comes out next week. What games will Yellen play? Here are some options. So inflation, you could argue, has been coming back. Powell is in this really uncomfortable situation because what the Fed's doing, yes, it is impacting the markets, but it's essentially being null and void by what the Treasury's been doing in the form of spending. This is why assets have done well, okay? And the game is, at this point, and we'll look at Brian Armstrong talking about this, that this is just going to continue and actually snowball. And this is why the likes of Bitcoin, gold, and things like that, I think, are setting up in the way that they are, because the fiat systems have been, 2008, things really broke, gradually getting worse, and now they're snowballing into, I say collapse, but I think people take out of context what I mean by collapse, because the US dollar is the system. There is no alternative until potentially there is, or they provide one. So I think we're talking, and I'm going to do a longer video about this in regards to how I think all this gets resolved and perhaps crypto's role in it. We've heard CBDCs mentioned. This is potentially how they usher us all onto a CBD system where they say, okay, this system got a little bit out of hand. We kind of lost control of it. They know what they're doing. It's totally planned, by the way. And they give you an alternative. What that means for Bitcoin, maybe Bitcoin is the alternative, but by that point, they'll have the lion's share of it. Very interesting. Everyone's very excited about BlackRock. From a price point of view, you've got every reason to be excited, but from a sort of fundamental point of view in regards to what Bitcoin's trying to do, BlackRock and its involvement isn't a great thing. But to continue, this is all happening on Monday, and we're only on Monday. We've got Tuesday, Wednesday, and Friday to talk about. So she's going to stop issuing treasuries by running down the TGA to zero. That is round about a $1 trillion injection of liquidity. So she'll be the $200 billion tax receipts. You're paying tax for no reason. It's not about closing the deficit at this point, because deficit spending is essentially funded by printing money. You're paying tax because it's all about keeping people as serfs. And that's what a progressive tax system is all about. Leveling, it is equality, but equally poor is what it's all about. So they're going to either inject $1 trillion worth of liquidity, or they're going to shift more borrowing to T-bills, which is what they've already been doing, which removes money from the reserve repo, which, since they upped the debt ceiling, we'll show you that chart because it's a good one to show. And this is where the Fed's Yellen's largely been getting her money from. So they did this here in May 2023, and since they upped the debt ceiling, they've drained $2 trillion, just under $2 trillion from it. So this is liquidity they've been pumping into the market that they've been getting from the reverse repo, which built up over, obviously, March 2020. And the events that took place over March 2020 and onwards in regards to all the printing that happened. And actually, March 2020, you had that yield curve inversion sort of going before that in 2019 as a result of a lack of liquidity that they then had an excuse to print a load of. I'm telling you, understanding finance is going to help everybody out to a degree. So they could drain bills from here. I think the Fed's going to they're going to, finance this through this method. I think the Fed's going to have to step back in eventually and completely null and void QT. But sort of what Yellen's doing is going to continue, but the Fed's going to be doing QE. This is this great narrative for markets, Japanese style economy. We'll talk about that in just a second. So a combo of one and two things. Issue no long-term bonds, only T-bills, which is what they've been doing. They've been shipping from bonds to T-bills, and run down TGA and reserve repo at the same time. That is a $1.4 trillion injection of liquidity. The Fed is irrelevant. Yellen is a bad female dog, is essentially what he's calling her here. We're not going to read that out. You best respect her. If any of these three options happen, expect a rally in stonks, and most importantly, a re-acceleration of crypto in the bull market, because crypto, we've shown you that with Bitcoin QQQ, is just a higher beta play of that. This was a really good take, by the way. I don't actually follow this guy, but I'm going to go ahead and give him a follow, actually, because I thought this was a really good breakdown of this. So explanation, the US government just put $200 billion into its piggy bank, the TGA, which makes its total around $1 trillion, which Yellen has to essentially play with. So option one is the government can use that money to fund its operational stuff without borrowing any additional money. Yep, but that's still liquidity into the markets. They're just not inflating the supply, but they're pumping liquidity into the markets. Option two, leave TGA cash and just borrow money for like 1 year. Money from the reverse repo, which is like a parking for bank money. It's how interbank lending and stuff like that takes place. As part of removing money from the circulating supply, we'll release back into the economy. Option three, go hard and release all the money. Yeah, very interesting. I thought that was quite a sweet take, but that's essentially Arthur Hayes' take I think was simpler enough. Could be coming on Monday, and we're going to get further insight into that. So how the market's react is going to be interesting. Also, the US Treasury are announcing a bond buyback program, which is the first time they've done that, I think, over 20 years. The fiat systems are dead, guys. Or certainly not what they were. The game that we were playing is still being played, but it's like everyone's now on speed playing it, if that makes sense. It's really hyper accelerating, and the fact that Bitcoin came about perfectly in 2008, it just leaves me with so many questions. Brian Armstrong also talking about us going into a Japanese style economy, US debt, or US now doing its best to run the Japan experiment as fast as possible. Debt to GDP is currently 120%. The project votes against this direction is to buy Bitcoin and extend Western civilization. He's so right on this. The game is up for these guys, I'm afraid. And we're going to see what happens on Monday. It's likely going to be telegraphed that there's going to be liquidity coming from the markets for the markets. And that might see them get a bit of relief, even though we're going into selling Macon back in St. Leger's Day. You know, a lot of sort of stock market sort of really supporting where we were expecting it to support. Remember, this was our sort of draw that we had from the start of 2023. You can see some real support coming in here. And actually, you had a lot of really bullish stocks closing yesterday. I mean, look at Alphabet. Come on. We've still got a higher target on this. Everyone was laughing at us when we drew this. And look at this going to 263. Why are stocks bullish? Why is gold extremely bullish? Gold is in like this huge macro pattern. I think gold, our target on the short term is 250, and then we've got 3,000, and then I think there's definitely room for it going higher, depending on if you want to look at the bigger patterns. Why is Bitcoin bullish? Why is everything bullish? It's because of what's happening with the fiat systems. So that's Monday out the way of. On Tuesday, you're going to get, in Hong Kong, the first Bitcoin and Ethereum spot ETFs, and Ethereum. People just miss Ethereum out. It's going to be really interesting to see and watch the inflows. This is, again, another unlock of liquidity. And this is great. And this is going to bolster the market some more. Bitcoin, to talk about Bitcoin, just doing very much following what we set out for it to do. It's just at this current point, and we'll put this on log. And the reason we use log is to quieten things down, if any, for people that want to ask. It's also easier for me to navigate around the charts a lot more. It just puts it into a percentage scale. This is just a pullback around all-time highs, very expected. We still have that $150 target, $151,000 target. The real chart for me, of course, is total. And, I'm really looking for this to sort of form that right shoulder and give us that $3.7 trillion market cap for the crypto space. So Tuesday, this is essentially taking place. Then on Wednesday, let's find it, which is the 1st of May, you've got Fed speaking. So they're not going to lower or raise rates, I don't think. What he says after it in regards to forward guidance is going to be of interest. You've also got ADPs. I don't really think they're too much of a great barometer for how non-farm's going to come out. And then on Friday, you've got non-farm payrolls. First Friday every single month. They've been massively beat. We had that negative, or we've had a really good GDP stats for the past sort of 6 or 7 of them. And now we've had one that's a bit of a wobbler. And is this just a bit of a wobbler, or is this a broader trend? Same with inflation. Are we just having a sort of stagnation in regards to deceleration of inflation, or is this the broader trend? And this is what you need to try and work out for the markets. But we are bulls when it comes to the markets. We think that fundamental narrative is the devaluation of the dollar through debt proliferation. And we're going to get a lot more insight into that. Now, the real question is, does that ignite inflation? And how does Powell deal with that? And do they let that run away? And you're getting terms like stagflation, all this getting thrown around. It's too premature. Yes, people can speculate on what the future looks like. And we said this, we were one of the few people to say we don't think we get that landing. I think it was Jim Bianco that termed that, coined that term, no landing. We're seeing it, right, because of what the Treasury's doing. It's kind of null and voiding what the Fed's doing. Again, the real question for markets really is, with inflation, is it just a hump? And then it continues to downtrend, which means the Fed then eases off, which kind of sees debt payments ease off, but kind of, you've then got the Fed kind of re-entering potentially. We don't see a bearish narrative at all for crypto, certainly when we look at things technically, and crypto is just a higher beta of the broader markets. So that is really it for me, guys. We've done quite a bit in this video. We've spoken about a number of comments. It's going to be a massive week next week. Pay attention to Monday's Treasury financing, some of the comments that come out of that. Tuesday, you've got Hong Kong spot ETFs for Bitcoin and Ethereum. Wednesday, you've got the Fed speaker. Friday, you've got non-farm payrolls. It's going to be exciting, guys. Stay tuned to the channel. We'll keep you up to date each and every day. As always, and on that note, I'm going to love and leave you. Thanks for watching. See you all in the next.